Yo, hello and welcome guys. Let's take a look at Bitcoin today. So, if you've been following the last two videos, you know we were watching this golden pocket right here, the 618 to 65 fib zone, as the level where I expected the higher probability bounce to happen. And what you're going to see is that we got a reaction almost exactly at this level. Price did go a little lower and swept this liquidity down here, but then we got a bounce. The thing is though, the volume on that bounce was fairly low, and right now Bitcoin got rejected back to the downside below the golden pocket, so we are currently sitting below it. Now, one thing I want to point out right here is the CME gap sitting at approximately 70.1 thousand US dollars. And with CME gaps, especially with the price difference this low, they tend to get filled pretty quickly. So I would expect price to push up and fill this gap. And above that, we also have a few liquidity levels sitting right here. And what's interesting is right here, this is where a lot of late shorts entered. So let me pull up the liquidation heat map and I'll show you. What you're going to see is the liquidations above the high are clearly visible, so there is definitely liquidity sitting up there to grab. But overall, I still think the structure right now is very bearish. As long as Bitcoin doesn't spend trading above the previous range high for a prolonged period, I think it's going lower. A quick wick above or a liquidity grab is one thing, but if we are not holding above that level and building structure there, in my opinion, we are still heading down. Now, if we zoom out a little, let's say to the 3-day time frame, there's something else I want to show you. What you're going to see right here is that Bitcoin has been forming a rising wedge over the past 6 weeks or so, and the rising wedges have a higher probability of breaking to the downside. And if we zoom out a bit more, you're going to see that Bitcoin formed a very similar structure right here back in December 2025 and January this year. Same thing, a rising wedge, price grinding up inside of it, and then it broke to the downside. So we've already seen this play out once. Right now we are seeing the exact same pattern forming again. And if you pull up the MACD on the daily, what you're going to see right here is that the MACD just turned red with this crossover. And the last time this happened was right here, right before the bigger move down. So again, same pattern, same MACD crossover. My first lower target in case this plays out, so if we don't see Bitcoin spend prolonged period above the previous range highs, is going to be the liquidity right here at approximately 65.5 thousand US dollars. And what you're going to see is that it lines up with the value area low of the fixed range volume profile. So again, we've got two things pointing to the same area, which is always what you want to see when you're looking for a lever to react off. But before that, I would like to say this CME gap at 70.1 thousand has a high probability of filling quickly, considering how small the price difference is. And potentially, we could even see a sweep of the liquidity level right here at around 71.3 thousand US dollars. So a push up first to fill the liquidity gap, or potentially even take the liquidity, and then if we don't reclaim the range highs, I would be looking for a move down towards that 65.5 thousand area. Now, it is still in the realm of possibility that Bitcoin does reclaim the previous range highs, and if that happens, we could see it visit highs of this rising wedge again. But even in that scenario, the overall structure still holds bearish in my opinion. So that's my current outlook on Bitcoin. I'm still leaning bearish, watching for a potential CME gap fill and a liquidity sweep above before heading lower. If you've been following along from the first video, you can see how all of this has been playing out. Make sure to subscribe if you haven't already, I'm posting this regularly. Let me know in the comments what you guys think, and I'll see you in the next one.